I see the event is about to start, so I'm going to hand over now to Dr. Latiwe Nzama Sitola to formally introduce the webinar and our guests. So thank you, Latiwe. I hope you all enjoy this event.
Thank you so much, Mark. Please confirm if you can hear me.
We can.
Thank you. It's my pleasure to welcome everyone. I see on the chat we have people from different parts of the world. Welcome, everyone. It might be the morning, it might be evening, it might be just in the afternoon like we have here in South Africa. So welcome. Please feel at home. This is a participatory webinar. We want you to be engaged and we want you to be empowered by the webinar titled The Corporate Revolutionary and Global Governance Journey, hosted by the Good Governance Academy in collaboration with the University of Johannesburg, the Department of Commercial Accounting, School of Accounting. Before we begin, I would like to just give you what we have in the menu. We will have a welcome address by our colleague, our director at the School of Accounting, followed by a fire chat between David Williams and the distinguished Prof. King himself, followed by the Q&A. So while they have the discussions, please feel free to take note of the questions you want to ask so you can follow up when we give you a section to reflect on that. Then later on, we'll do the closing remarks. This is a tight webinar. We only have 1 hour for us to do that. But before we kick off, I just want to formally introduce today's event where we need to now reflect and know why we are here. So we are here because we have the legendary Prof. King himself, who has shaped the governance practices, not only in our country, but global as well. If you are in accounting or auditing field and you are writing papers, there is no way you write a paper without citing him. When you look at the King reports that he was part of the team who had produced the King reports, you will always cite him. So before I hand over to our speakers, let me remind you about that this is participatory, which I've already mentioned, so feel free to take note. First things first, you might be probably asking yourself, why UJ, why Good Governance Academy, why this collaboration? Because we have important people in the room. You might ask, who's Prof. King? I doubt you'd ask that. But should you ask that, let me help you answering that. He's a globally recognized expert in corporate governance and sustainability. He had previously chaired the King Committee. He had produced the King reports. We have 4 King reports. And yesterday I was in one of his webinars hosted by IWFSA, where he said there is a need for updating of Companies Act. But in terms of King 5, maybe not. Maybe there's no need yet. But we'll hear for today in what he shares on his journey on the corporate governance. It's very instrumental in shaping the integrated reporting and ESG, and he's an advocate of ethical leadership, transparency, and accountability in the public and private sector, and that is important. Again, you might ask, who is David Williams? David Williams is the author of the prominent book that we're going to reflect on today, The Corporate Revolutionary. So he's an author, he's a journalist, he's a commentator on business and governance. So it's a good deal to have so that you can have an insight and discussion between himself and Prof. King. Again, I've asked and I've mentioned why we have UJ and corporate governance. We have similarities at Corporate Governance Academy and UJ. Corporate Governance Academy focuses on elevating global governance standards, fostering accountability and ethical leadership. And who we are at UJ, we share similar vision and mission. We aim to develop reasonable and responsible leaders through academic excellence and critical thinking. We produce critical thinkers who are also problem solvers. Hence, we are here today to ensure that we empower not only South Africans, but as you've seen in the room, we have multiple people from multiple sectors in South Africa and also global. So welcome. Before I can continue, let me do the formal appreciation where our director of the School of Accounting will share and welcome you officially. Over to you, Vanessa.
Thank you so much, Dr. Latiwe, and good afternoon, everyone. It really is a great honor and privilege to be sharing the screen, if I could call our stage that today. The screen today with so many distinguished guests, Prof. Mervyn King, it really is wonderful to have you with us. Thank you for joining us. Without wanting to date myself, I should say that I have literally studied each version of the King report from undergrad through to postgraduate and masters. I remember being in 3rd year BCom accounting and being given a printout of the first King report on corporate governance and having to study that for the exam. So I've had an intimate knowledge of the journey that the King report has taken, and therefore it really is a great privilege to have you with us today. Thank you to the HOD of the Department of Commercial Accounting for joining us as well and sharing the stage with us, and to everyone who's here from all over the world. It really is wonderful to be unpacking this corporate governance landscape with you. Just to make you understand where we as UJ fit in as well, we are representing the College of Business and Economics today. It is the largest faculty. We call it a college, but it's a faculty within the University of Johannesburg. We have 6 schools, various departments, we have research labs, we have institutes, and we have 3 SARCHI chairs as well. So we really are a force to be reckoned with. Representing today is the Department of Commercial Accounting, and many thanks to Dr. Letiwe for taking up this initiative to have this discussion today. So ladies and gentlemen, I just want to welcome you once again and say, please enjoy the session. Please be interactive. Let's engage on these important issues of corporate governance, because ultimately that is what we want to strive for in South Africa and globally as well. But a situation where we have an environment in which all our entities, whether they are public, private, it doesn't really matter, strive to do what is right and make sure that the principles of good governance is what we are looking to achieve. So over to you again, Dr. Letiwe.
Thank you so much, Vanessa. While you were speaking, I thought of my years when I was doing honors, that I was introduced to governance by yourself when you were taught us, there was the module, I forgot the name, but it was governance, and you were the lecturer of that module. So it's now full circle. The producer of King Report is here. The teacher of King Report who introduced me to it is also in the room. Insightful. Thank you. Now we move over to the intimate, insightful fire chat between the legend himself, Prof. King, and David Williams. So I just want to check with David if he's now able to share his camera. David, are you able to?
I've got some help here, but the expert help says there's something wrong with my laptop. What I'm going to do is go on my phone, and I'll be back with you in a minute by phone.
Okay, no problem. Thank you so much. While we wait for David to get his laptop sorted or his phone sorted, I will just ask colleagues to remember to share on the chat their questions, if they have questions, or just reflection. How are they feeling? What they aim to achieve from today? What do they expect from this session today? So let's have colleagues sharing on the chat. I can only see the Q&A. I don't see the chat box on my side. Okay, there is the chat. I just see our link. So colleagues, please feel free while we wait for David, because he's going to run the show. He's the author of the book. He'll be able to ask correct questions to the legend himself, Mervyn King, in terms of the journey of this good governance. So while we wait for him, please share on the chat, what are you hoping to achieve today? Thank you.
Recording in progress.
Press that.
You're on mute.
Is it on?
I don't see any activity on the chat. I'd like to encourage you to just indicate what you're hoping to achieve. Thank you. David, are you ready to start? Okay, you give us a thumbs up as soon as you're ready. Thank you. Thank you, Zikani, for that. Zikani is hoping to gain understanding of greater context of corporate governance. Thank you for that. Okay, David, are you ready? Okay, kindly unmute. While we wait for David, there's also a chat by Paco who says he's from Gaborone and he's very excited. And let me not say he, but they are excited and full of anxiety to listen to the 2 pillars of governance. I'm anxious on your behalf as well, Paco. So we're in the same phase. Thank you. David, are you able to unmute? Yes, I think you have managed to unmute.
Can you hear me now?
Yes, we can hear you. Perfect. Thank you. So, gentlemen, I will now hand over to you. You can go ahead. Thank you.
Thanks very much, and sorry about the technical delay at the beginning. I thought we could kick off by talking about the title of the book that I've done with Mervyn. the corporate revolutionary. And a couple of people have said to me, why revolutionary? This is about governance, and people imagine governance is a thing that company secretaries have to do. And what's it got to do with revolution? And it was only when really getting involved with the issue with Mervyn that I realized how truly revolutionary his contribution has been, obviously with a lot of other people. And I think there are two aspects to this, and perhaps Mervyn can talk to each of them in turn. The first one is in the South African context, and I know there are people who may not be in South Africa who are listening and watching this. In South Africa, if you think back to the early 1990s, South Africa was a country and an economy run by mostly older white men. And the inequalities in the country were the most severe in the world, arguably. And we had Nelson Mandela out of prison in 1990. We managed to get to a democratic election in 1994, what Patty Voltheim of the Financial Times, I think, called the anatomy of a miracle. No one expected this. But perhaps the bigger miracle that was necessary beyond the political miracle was the economic miracle, in the sense that how do you take a society that is so unbalanced economically as well as politically and turn it into a naturally functioning democracy? If you think of other countries where they achieved political democracy from colonialism, in many cases the economy was working already, or not perhaps working as well as it should, but it wasn't as unbalanced as ours. And governance was at the heart of this, which Mervyn saw as a leader in business and in law. He understood the inequalities, and he saw that business would have to do things differently if it was to contribute to a new South Africa that would work. And so, Mervyn, started your journey with the Institute of Directors, primarily at the beginning, on the way to doing things differently, Mervyn.
Yes, well, going back to 1992 was when Richard Wilkinson, who was then the chief executive of IODSA, and asked me to form a committee and write a code for how to conduct business in the new South Africa. At the time, I was the chairman of FRAME, First National Bank Corporate Merchant Bank, Operation Hunger. I was doing a few things, in other words. And I said, let me mull about this, and I'll come back to you, Richard. But that afternoon, President Mandela telephoned me, and he and I had met before he went to jail, and during jail, when I was chairman of Operation Hunger, Intalia Zinzi, his daughter, worked at Operation Hunger. So he and I kept in touch through his daughter. And he came out of jail, and we often spoke about issues. And that afternoon he phoned me, and just shows his prescience, because he spoke about the nature and content of our education system in South Africa. And I said, by the way, Mr. Mandela, this morning I've had a call from the IOD, and they want me to form a committee and write a code for how do we conduct business in South Africa, the new South Africa, moving from a country of unequal opportunity to one of equal opportunity. And his response was the following: do it, you're the right man. That was my mulling.
That's right. So Mervyn, you did it. You got people together. You got the Johannesburg Stock Exchange on your side to help ensure that companies would become compliant with the codes. But I started by saying there were two revolutionary aspects. And for me, the more important one in the global sense, but also in just how companies run, not just in the context of South Africa, was that you pinpointed, you rediscovered the idea of the primacy of the shareholder, and how that idea had come to have a stranglehold on the way companies thought about themselves and what their purpose was. In other words, the purpose was only to make profit. And from this, you developed a new way of thinking about governance to move away from the primacy of the shareholder. Take us back to the origins of that perception.
Well, towards the end of the 20th century, there was some research done because there were strange things happening on the great stock exchanges of the world. The market cap of companies listed on, for example, the S&P 500 in America showed that only 20% of the market cap was reflected in the financial statements according to financial reporting standards. In the case of America, the FASB standards. So there was a reason that investors were looking at value differently. And one of the reasons was that research had shown that we as individuals, but much more so the limited liability company, was using natural assets faster than nature was regenerating them. At the same time, populations were increasing, so demand for product was increasing. So if you put that together, that equation equals disaster. And people wanted answers on these issues. So an initiative was started just at the turn into the 21st century called the Global Reporting Initiative, where we tried to give some guidance as to how to report on these so-called intangible assets, sustainability assets, ESG. The name kept changing, but the same issue. They were not included in a balance sheet according to financial reporting standards. And at the same time, I think the only person who knows this personally is you, David, because I think others are too young. But at 2000, 2001, there was a oil from food scandal at the United Nations. And the United Nations appointed 12 eminent persons, their language, not mine. I was one of those 12. And then Kofi Annan, who was the Secretary General, asked me to chair that committee to review the governance and oversight of the agencies of the United Nations, such as the WHO. And it was there that really the issues of sustainability we discussed in great detail. And although I was very aware of the degradation of the planet, and that right through the 20th century, profit had increased but subsidized by society and the environment, I became steeped in the question of sustainability through the GRI and through the United Nations agencies. And that's why when I wrote, and I did write the first report, I learned there that I needed subcommittees for the next report. It was such a big job. But I knew one thing, David, that if we followed the dictum at the time of the primacy of the shareholder, which originated back in the middle of the 19th century when wealthy families didn't want to own businesses or start new businesses because when they went bankrupt, they were still liable to the creditors, the employees, etc. And Lord Gladstone and other intellectuals of the day said, well, why don't we create an artificial person and we'll give it limited liability by statute? We'll say these people with wealth, you can take a share of this entity and that's the end of your liability and duty to this company. The concomitant of that is that when or if it goes bankrupt, you will be at the back of the queue, first creditors, then employees, then you as the provider of capital. And that happened with much resistance. There was Lord Thurlow, for example, a clergyman who said, who are we to create a person? Only Almighty. The Almighty can create a person. And we're creating a person that has no heart, no mind, no soul, no body to be kicked, and cannot even be charged with treason. I've quoted him verbatim because I've read it so often. Lord Thurlow was absolutely correct. The limited liability company, we're all associated with them. None of us has ever touched it because it's an intangible. It's a fiction. But the entity is critical, and I've often described it as probably the most important citizen in every country around the world, because it's through the limited liability company that capital is raised and that jobs are created. So I formed that committee, which was reflective of what became known as our Rainbow Nation. But I wittingly, maybe they weren't aware that I was doing it, steered them away from how they'd been taught, namely the primacy of the shareholder. I kept on showing them that the shareholder had no duty or responsibility to the company, that once it had acquired the shares of the company, that was the end. They had no duty or responsibility to the company whatsoever. Also, when an IPO happens, the subscribers pay their money, and the money for their shares goes into the company. As soon as they sell their shares to the secondary market shareholders, the secondary market shareholder pays Mervyn, who is the original subscriber, and the money doesn't even touch the company. So from the secondary market onwards, the shareholder is really not a provider of capital and actually is a trader. So I kept on hammering this and got them to understand the issue. And we developed, the first report was to learn and understand the needs, interests, and expectations of all your stakeholders relevant to pertinent to the business of the company. Because as a matter of fairness, you'd have to explain to them when the board as a collective made a business judgment call, which was in the long-term best interest of the health of the company. From obviously some stakeholders would benefit from that decision more than others, and there'd be trade-offs. And there'd be a complaint about this, but as a director, you could explain to them that next time you might take a decision, they would benefit of it rather than another. But what the board's duty was to make sure the long-term health of the company, and so moved their mind away from this business of success being measured by increased profit, increased share price, and increased dividend, even though it was being subsidized by society and the environment.
So, Mervyn, the logic of what you say, much of what King has said over the years, now seems incontestable. But in the early days, for example, in the South African context, and I think in many other countries, the early King codes called for example, transparency on remuneration, so that the director's remuneration should be revealed, because stakeholders and indeed shareholders of the company should know what the senior executives were being paid. And there was a huge outcry in South Africa about this. The executives of big companies said, this is unacceptable. It's competitive information. Our children will be kidnapped if they know how much we earn. It will enable headhunters to prey on other companies and so on. And that was for collective remuneration to be revealed. Now it's a part of business. No one remarks on it. All company reports have that. Another issue was the independence of the chairman, where a lot of companies in South Africa, such as Sasol, global company, now, of course, Standard Bank, one of the big banks in Africa, it was the custom at these institutions for the chief executive to become the chairman when he retired. So he reached the mandatory age of 60 or 65, and he would then go on to be chairman for apparently as long as he would wish. And that was a very cozy relationship and didn't do much good for independence of thought and mind and action by directors. So those were two examples where the battle was won, and in many respects has been put to bed, because these things are now accepted in many jurisdictions. However, one one suspects, Mervyn, that the primacy of the shareholder idea remains tenacious, and particularly when a company is in trouble and needs to get a turnaround financially, one worries that perhaps they will simply say, well, it's all very well having the soft stuff about sustainability and stakeholders and so on, but we need to get the numbers right. So we're going to employ a man who's going to do a turnaround, and the criteria for his success will be simply financial, because we're in an emergency case and we haven't got time for all the other stuff. One feels, and in talking to executives, you sometimes get this impression that they'll buy into the new idea, relatively new, but increasingly taking hold of the primacy of the shareholder is not the way to run things. It's all stakeholders. And as you say, ultimately, it's the sustainability of the company. But isn't there still an instinctive default to the finances, to the money side of it, when things get tough? And perhaps then it's too easy. In other words, it's tenacious, this concept of primacy of the shareholder, and comforting and simple indeed when a company hits problems.
Well, David, you started your question with pointing out an ailing company. Now, we've never really dealt properly with ailing companies. Failing companies, we know to put them into liquidation. But ailing companies is another situation altogether. And one thing an ailing company will need probably is to raise more capital. And today, that ailing company is not going to raise capital if it's just acting on the primacy of the shareholder. Because in the capital markets of the world today, if you and I are directors of a company, we issue a bond for $100 million with a certain coupon, they would do a financial due diligence, certainly, but they also do due diligence today on the non-financial aspects, the ESG issues. And I think the King Committee can be proud that they use the outcomes-based approach to that. That really, what are the outcomes of what the company is doing, its activities? And does it actually achieve 4 goals? Value creation in a sustainable manner, adequate and effective internal controls, that there's trust and confidence in the company by the community in which it operates. So these are the tests done in the capital markets of the world today. So an ailing company who's looking now for additional finance, I'm afraid if it's just going back to the primacy of the shareholder, will probably not be able to raise capital.
You also had the insight, which I think might not have been obvious to a lot of people. As I've said to people who have bought into the book and our sessions, I have been on the other side of the fence in one side as a financial journalist and reporter, but also in a big company, South African Breweries. Big South African company, very successful, became a global company, SAB Miller, now part of AB InBev. And they had a very, very good sustainability program aiming at water neutrality, for example. Very difficult for a company whose product consists mostly of water to achieve water neutrality, but that's what they did. But what struck me when I was there was that there was a department which looked after that, which was not part of one of the operational departments. And I think just about every company in South Africa, maybe the world, had a division which looked after things like sustainability and the economic, social aspects of their business, as opposed to the core thing of manufacturing, marketing, selling, distribution, and so on. And so it seemed logical that these separate divisions must look after things. But you hit on the idea of that the people who were administering the primacy of the shareholder model were also the people who should make sure that reporting on all the other aspects happens as well. And that is the accountants, which was perhaps unexpected. Perhaps go into how accountants can save the world, to use your phrase.
Well, David, you've actually answered the question yourself, because there shouldn't be separate departments on sustainability issues and financial. All these things are integrated. And you've given a very good example. Water is essential for beer. So these things are integrated in reality. And only this morning I was on another webinar, and we spoke about that. I don't think any limited liability company in the world today still thinks in silos. They accept that these things are integrated, hence integrated thinking. So, David, from my thinking, I met Sir Michael Peet, the private secretary to Prince Charles, now King Charles, came to see me at my office in Amsterdam as chair of the GRI. Prince Charles had started accounting for sustainability. He argued that some of the principles of accounting should be changed to encompass these so-called non-financial assets that were having such an impact on value. And I was talking about the integration of these things. And so Michael Peet came to see me about this. And the result was that the Prince held a meeting at St. James's Palace where he invited accountants from around the world to come, and I was the speaker. I addressed them, and I pointed out that operationally these things are integrated, like water with your beer, and we should be reporting as the company operates on an integrated basis. And that was accepted. And I think you write in the book that Sir Michael Peet said it was one of the best speeches he'd ever heard, or the Prince said that it was one of the best speeches he'd ever heard. And it was absolutely convincing to the Prince that we had to think on this integrated basis and move away from this silo thinking. And this led to the establishment of the International Integrated Reporting Council, of which I became chair, and that was launched also at St. James's Palace. So Michael Peet and I drew up that invitation list, and we made sure we invited the who's who in the accounting world. So FASB, for example, the accountancy standards in America, those people, the IASB from the IFRS and whoever, but they received this gold embossed invitation to attend a meeting at St. James's Palace from His Royal Highness Prince Charles. Now, everybody wanted to keep that in their scrapbook, you see, so everyone turned up. And I gave my speech on that we had to change mindset of the thinking of boards. So you've got individual directors, but decisions are made on this collective mind. And the collective mind had to look at things on an integrated basis, because business was at the junction of three things: the economy, society, and the environment. And it's those three things that result in sustainable development. And we need development to be sustainable if we as Homo sapiens are going to survive on planet Earth. We have what you describe in the book, David, as the awesome responsibility as the principal creature on planet Earth to actually ensure that the planet survives. And we all know what's happening at the moment with the planet, that it's been degraded. And if we don't get it right and achieve the Sustainable Development Goals developed by the United Nations, well, we may not have a planet, Earth, to survive on by the end of the century. So these things were a driver for me and became a driver for people involved with the International Integrated Reporting Council. And I said, it's the accountant who is the true change maker. So the accountant, instead of sitting in the corner office and just drawing the financial statements according to standards and giving it to the board for approval, had to think about a value creation situation, moving away from the privacy of the shareholder. Value creation, preservation, or erosion, because that's what happens. So the accountancy profession had to be taught differently as well, and that has happened. And that's one of the reasons I started the Good Governance Academy 7 years ago, in order to educate the educators, because I was aware that some universities and business schools were still teaching on the basis of the primacy of the shareholder. And I wanted this thinking of value creation to actually go around the world, and it has gone around the world. And the change maker has been the accountant. So, for example, Audencia, the oldest business school in the world, 128 years old in Paris, has launched their MBA is the CVO MBA, the Chief Value Officer MBA. Because of all this, I proceeded to write a book, which was published in 2016, called The Chief Value Officer, Accountants Can Save the Planet. And I think that's what you're referring to, David. I pointed out the accountant wasn't only dealing with numbers today, he or she was dealing with this whole value creation situation. And therefore, sitting on the board was a true change maker in that boardroom. And so it has turned out to be. And universities such as my alma mater have started postgraduate diplomas in integrated thinking, value creation, etc., etc. And that has been the change around the world, which hopefully will result in saving the planet. Certainly my children's children and their children, although if we don't get that right and discharge that awesome responsibility of making sure that planet Earth is somewhere, it's something that will sustain itself and that will survive. And we actually have a duty to those who come after us to make sure that it's sustainable for those that can actually sustain themselves on planet Earth.
And it comes down to the business, as you say, the most important citizen in any country, Mervyn. Governments too need to be aware of governance issues, and we talk in the book about state-owned entities in South Africa like Eskom and Transnet, where governance went wrong. Partly, I believe, because the primacy of the shareholder model was accepted, perhaps unconsciously and instinctively, by governments who call themselves the shareholder now of these big entities, which are actually government departments with a board being put in between the minister and the entity. And if you look at what's happened there, the boards have not done all the things that they should have done in terms of your codes and general common law and common sense of duty of care, duty of diligence, applying their minds, doing what is right for the organizations. And one of your books has the subtitle, Governance for All Entities. We are not just talking listed companies here, but government departments and all organizations in society, aren't we?
Correct. And I think the extraordinary thing with public sector, and on the 11th of November, the Good Governance Academy, we're having a colloquium on the public sector, because government still has this state of mind that the shareholder owns the company. Now, in fact, the shareholder does not own a company. A shareholder has none of the attributes of ownership. You've got a pen in front of you, David. You can break it. You can give it to me. You can throw it away. You can do what you like with it. A shareholder can't go into a company and remove a pen from the company. That's a theft. So a shareholder is not the owner of the company. And a shareholder should not be in a position to override the decisions of the board, because on the governance architecture, the board is the heart, mind, and soul and conscience of the company. And when something goes wrong, liability falls on the directors. It doesn't fall on the shareholders. And the government, as the sole shareholder, in addition, makes the governance error of having the statutory right to appoint the chairman and the chief executive. And one of the most important things that a board has to do is to appoint the chief executive to head up the management team to implement the decisions of the board. And the government removes that and appoints the chief executive. And let's assume he absolutely messes things up. The directors get sued, not the minister. And the same thing if he appoints the chairman. The chairman comes and sits in the boardroom as the leader of the board and also as the sole shareholder. So he sits with two pips on his shoulder, which unbalances the whole boardroom. So I am quite critical at the moment of the amendments to the Companies Act now, which says that the shareholders must approve the remuneration policy of the board. Now, of the company, the remuneration policy would be developed by the remuneration committee, go to the board, and the board would approve it. The board is the most knowledgeable collection of persons about what is happening in the company and what kind of skills are needed in its directors, etc., and what he or she should be paid and why they need to be paid in that compared with other companies in the same industry. The shareholder has no duty or responsibility to that company. The directors have all the duty and all the responsibility. And the shareholders now have the ultimate say as to whether the policy should be carried out or not. So they've actually removed that out of the hands of the board, which is a clear responsibility of the board, and mandated that shareholders in general meeting, and they've got a 2-strike rule, so the second time they don't approve your remuneration policy under the amendment, you remove from the remuneration committee, but you can stay on as a director. But of course, the shareholders would then not appoint you a director again. So it's a matter of, for serious comment, I believe, this amendment, that shareholders have the final say on pay because they have no duty or responsibility when something goes wrong in that appointment. And the directors would have formulated a policy which they believe is in the long-term best interest of the health of the company. And yet, by statute, the companies in South Africa, public sector and listed companies, can be the board's decision can be overridden by shareholders in general meeting, which I think is, I can only think of one word, that's cockeyed, because it's actually the wrong way around.
Yeah.
But I'm afraid that's how the amendment has come out. And it was interesting in the discussion I had with some corporate leaders and public sector people last night. They said it was a name and shame game. Well, you put at the top, you put the earnings of the top executives and prescribed officers, and you put at the bottom what the 5% of the bottom their earnings are. And of course, you've got this inequality gap. But the question is, how do you close it? It's all very well naming people, but that's not an answer to the problem. We've got an inequality gap in society. We've got an inequality gap in our companies. My answer to it is variable remuneration, that you actually give a person a basic salary, but you say to him or her, who's an executive and a prescribed officer, that last year there were 6 things that were adverse to the environment that this company did in producing its product. what are your plans to eradicate or ameliorate those 6 things? And if you can achieve those, then we'll consider giving you a bonus of X rand. And so you could build a salary, you could take a salary of 8 million rand and renegotiate it down to 1 million rand and 2 million rand if you achieve your plan for improvement on the impacts on the environment, another 2 million rand for improving on society, etc. Much more palatable to external stakeholders. And you are actually creating value for the company and value for society. And we must never forget that the limited liability company was created by society, United Kingdom government, representing society for society, in order to raise capital and to create jobs.
Well, Mervyn, we could go on, and we would want to go on, I think, but I've been asked to wrap up. I'm not sure if that means we pause here and let people comment and put questions to you.
Yes, thank you so much, David. Yes, if we can allow Prof to continue, we'll spend weeks, not even days, talking about governance, because he's so passionate about governance. So it was really a hot fire chat. I'm really empowered, and I can see the passion between the two of you in terms of governance. We have received 3 questions, and I would like to encourage colleagues to please continue sharing questions. But from what you've shared, Prof. Mervyn King, what I'm picking up is the call. And if we have accountants in the room, the accountants need to now pause and ask themselves, according to their role, are they game changers? And if they are game changers, in terms of the impact, is it only limited to their organization or also for society? Do they think of sustainability? Do they apply integrated thinking? So that's important for accountants to reflect on. In terms of the questions, we received 3 questions so far, and apologies, I will not read the names, but the first question says, have the benefits of effective governance been demonstrated, or is it only through failures? That's the first question. You can pause on that. Prof, do you want me to read all of them, or you want to go one?
Well, I'll answer them one by one. If you don't practice quality governance, and it's about quality, it's not about quantity, and it's not. You don't legislate about this. So I'm hypercritical about the Public Finance Management Act, which was promulgated in about 2001, I think it was. So those of you who work in the public sector I always say, God bless you, because you are actually your mind is in a box, and you have to make sure when you're doing something that it conforms with Section 5(2)(a)(4) of the Public Finance Management Act. So you focused on conformance instead of performance. And not only that, it's fallen into disrepute because although there were many breaches of the Public Finance Management Act between its commencement and the start of the Zondo Commission, for example, no one was charged. No one at all. The first person to be charged was a person who was not a public servant. It was that famous South African Italian singer, Mr. Grisi, who sang very nicely about Bosasa at the Zondo Commission. And as he stepped out of the witness box, he was arrested and charged under the PFMA. Quite extraordinary. So it doesn't work. You can't take a mind and make a mind who is got a roguish tendency to operate ethically and to realize they are the heart, mind, soul, and conscience of this company, and that as a guardian of assets and business affairs, it's the same as being the guardian of a minor child. You've got to look after them, and you've got to act properly and with conscience and ethically. And people just seem to forget that you're actually acting for an incapacitated person, the company. So that's the answer to your first question. The second one?
Thank you. Second question, given the fundamental development of ESG, increased focus on the boards, following the corporate failures and global effects of COVID-19 and the Russia and Ukraine war, since the publication of King 4, do you feel King 4 is still relevant, or should we expect King 5? And this question you've covered yesterday.
Well, don't expect King 5, and it's not a fault of the King Committee, it's a fault of what's happening internationally. The sustainability reporting is becoming extremely important, and over the next 2 years, it will be mandated globally. The question only is what standard. And unfortunately, we have a potpourri sort of situation of standards. We've got the ISSB standards. We've got India with its own standards now. We've got the EU legislated. So all those major economies, France, Germany, Italy, etc., have got to do double materiality sustainability reporting, inside out and outside in. And the top 100 companies in the UK, after Brexit, they're not part of the EU, but they've said, we think we're going to follow the EU standards. And you've noticed the new Prime Minister has visited Germany already, France, Italy. So he's trying to get close to them because of all the adverse effects of Brexit, such as queues of cars going away for the weekend. So the time is not ripe to do a King 5 with all this uncertainty around it. So, but attention is being given to try and simplify it and give it in a very simpler manner to make sure that it is applied. The outcomes-based approach to governance has gone around the world and is being adopted in the capital markets of the world in assessing, for example, the value of a coupon, value of a bond. So the answer is that what was said in King 4 has gone around the world and is still operating.
Thank you so much, Prof. Then the third question is, given the ever-growing importance of corporate governance, is it now not time to legislate, same in South Africa, as it is done in the US?
The answer is no, because I think we've seen from our public sector companies that's not the answer to legislate. The answer is, I think, peer pressure and market forces have got greater weight than to legislate and to fine and to charge. And if you don't follow it up, as we've seen, it hasn't happened in our country. And it does constrain the thinking of people in the public sector companies. As I said, they're conformance-driven instead of performance-driven.
Could I come in there, Mervyn, just to add to what Mervyn said?
Yes, you can.
Yeah, I think what struck me in working through the different King codes and seeing Mervyn's thinking from the early 90s onwards is the consistency of this principle that you do not legislate. And it seemed the obvious criticism. And when the King codes came out in South Africa, a lot of well-meaning criticism was all very well, but there are no teeth. There's no way to enforce this. And Mervyn came back very strongly to say, what he's just said about peer pressure and so on. But what struck me about this is that if you legislated, you would then have laws and clauses, and the tick box approach, which is precisely what is the aim is to avoid a tick box approach, so that the company goes through saying, yes, we filed this report, yes, we've done that. That would encourage the tick box approach if you legislated, because if a company was then accused of infringing good governance, they could first of all point to their tick boxes, and if there was dispute over the tick boxes, you would have armies of lawyers, and depending on the size of the company, huge legal fees on both sides, trying to prove or disprove an infringement of governance. And in a way, the bigger the offender, the more easy it is to avoid the law or the tick box approach. Whereas, as Mervyn says, if you're not having tick boxes and laws, peer pressure and just the compulsion of investors and society as a whole, and as Mervyn said, big investors, big companies are asking questions about sustainability by companies. Having laws about it is not actually going to make a difference and probably make it much worse.
It's a question, David, of when you have legislation, it becomes almost mindless. You sit and make sure you've ticked that box. Whereas the outcome-based approach, which we've advocated in King 4, makes it mindful. You have to apply your mind. Or is the outcome of what you're doing actually being achieved, those 4 outcomes which we set out in King 4? So it becomes mindful instead of just a mindless tick box approach. Speaking to people in some of our major public sector companies, they estimate they spend 60% of their time ticking boxes, complying, and only 40% of their time on performing. And that's, speaking as a citizen of South Africa, that's not in my interests. We want them to spend 100% of their time on performing and not just ticking boxes.
Thank you so much, Prof. We have 3 more questions and we just cognizant of time, but the question is the gap between accountants and governance. How can the gap between accountants and governance be closed?
I didn't know there was a gap. I think most accountants today, and Vanessa is laughing, most accountants today accept that they're not there just to draft the financial statements. They play a much greater role in this mindset change of value creation. So they've moved away from this question of the primacy of the shareholder to this value creation model. And they ask the question, are we actually adding value? That's why I said that to call the person who's in charge of the financial aspects incorporating value creation the chief financial officer today is a misnomer. It should be chief value officer. And IFAC, the International Federation of Accountants, agreed with me. They wrote an article saying, Professor King is right. We actually have to become chief value officers. Now, you look at some of the great companies in the world, and there's a few companies here in South Africa that have a chief value officer, and he has a chief financial officer and a chief sustainability officer reporting to him or her. You can see the thing has changed. So being a chief value officer is very interesting. And about 2 years ago, I got a call from a man called Bernard, don't know from Boris Open, but he said he was a chartered accountant. He'd given up his job as a chief financial officer when he heard of Audencia doing the CVO MBA, and he went to do it. And he traced me, and he phoned me to thank me for changing his life. He said, you cannot believe the job offers I've had since I've got the CVO MBA. So there it is.
Thank you so much, Prof. We are running out of time. We note the questions that have been asked. We will respond to them via email. Please, colleagues that have asked questions, please share your email addresses. Then we will share with the panelists to respond to that. But now we have come to the end of our Q&A session. As we need to meet the deadlines as we are accountants, we need to be accountable and ensure there's proper governance within the public lecture. Thank you so much, Prof. Mervyn King and David Williams, for the opportunity to share the journey that came through to the book that was published. And we hope to get more readings and reflections on that through future events that we'll have in collaboration with the University of Johannesburg. Colleagues, this comes to the end of my journey as the program director of this webinar. I'm now going to hand over to my colleague, Boitumelo Khuzwayo, who will be doing the vote of thanks and conclude the session. Over to you, Boitumelo.
Thank you so much, Dr. Lethiwe Nzama-Sithole. And thank you to you, Prof. Mervyn King and David Williams, for the valuable insights that you shared. And I also love how witty you are. Prof. Mervyn King mentioned earlier that he had a call with our former president, Nelson Mandela, in 1992. And I chuckled a bit because I know that some of us in the audience either weren't born or, like me, I hadn't reached half a decade on Earth. But it's really wonderful to be in the presence of a legend in the form of Prof. Mervyn King, as well as David Williams in terms of the insights that they've shared. Prof. King also spoke about the importance of stakeholders and not shareholders, and the role that they play in the success of any business. I think this principle can definitely be applied not only in business, but in the world at large. It's great to see the different people that are in this session and where they come from. For example, academia, the finance sector, and the legal fraternity, and etc. Today's session reminds me about an important topic and the concept around sustainability. Our Department of Commercial Accounting previously hosted Prof. Mervyn King for a public lecture in 2022. And in collaboration with our department's professor of practice and the CEO of the Pan-African Federation of Accountants, also known as PAFA, about future fit accountants. I think accountability, sustainability, agility, and collaboration have always been and will continue to be important concepts that we always need to remember as professionals as well as citizens in the world that we live in. In the past week, I've spoken about sustainability in different forums and with various people 3 times. This speaks to the importance of it. Just now during our public lecture, I actually had to, there was load, well, I can't call it, I don't know if it's load shedding or load reduction. I had to move from my office and shuffle across the corridor because the generator came on, and my team was helping me to get into a different room. So that speaks to agility and making sure that you make things work with the resources that you have, as well as remain accountable and sustainable as an individual and a business. To bring it to a close, on behalf of the Department of Commercial Accounting, I would like to thank the following organizations and individuals: Prof. Mervyn King and David Williams for the insights that they shared about the corporate revolution. It is truly an honor and a blessing to be in your presence and to have you share the wealth of knowledge and wisdom that you have. To the team at the Good Governance Academy, including your CEO, Caroline Khames, Mark Morley, Ruth Barnett, and Evelyn Parker. I'd also like to thank our school director, Mrs. Vanessa van Dijk. And a big thank you as well to Dr. Lethiwe Nzama-Sithole for being an exceptional facilitator during this session. In South Africa, we are celebrating Heritage Month, and it's a pleasure to see people and where they come from in terms of the various parts of the world. In the chat group, you are asked to share where you come from, and there are people from Ghana, Romania, Zimbabwe, Dubai, the UK, Athens, Botswana, and Namibia. Thank you to everyone who took the time to join us and to participate in today's public lecture. We encourage you to purchase the book titled The Corporate Revolutionary. I think the link was shared earlier on in the chat box, so please do the right thing and get a copy. Today's session and Prof. King's journey always reminds me about how we can't live in silos. Prof. King, from a legal background, was the founders of what I call the Handbook of Corporate Governance. With that said, the University of Johannesburg is running a 30 Years of Democracy series. Please be on the lookout on our LinkedIn page, UJ Department of Commercial Accounting, where will we have a judge from the Supreme Court of Appeals discussing the role of the judiciary in the context of the accounting profession in our country in October. This is quite important because as citizens of this country, we can't afford to think in our silos and think that we don't actually interact and the need for collaboration. Let's go out there and be in what Prof. Mervyn King coined, future change makers today, and to create value in our respective spheres. Thank you and goodbye.
Thank you, Vanessa.
Thank you.
Thank you,
everyone.
Mark. Thank you, David. Thank you.
Bye-bye. Thank you.
Thank you, Prof. Thanks, team.
Thank you. Wonderful.
Thank you, everyone.
Bye.